Welcome to a brand new explainer. Today, we're diving into one of the absolute most fascinating segments of the financial market. We're talking about the Nifty Next 50. Now, if you follow the markets at all, you know you always hear a ton about those massive blue chip giants at the very top. But what about the companies right on their heels? You can really think of the Nifty Next 50 as the ultimate waiting room for India's biggest market giants. These are the rising stars, the companies with massive, massive valuations that are just one step away from taking the absolute crown. So today, we're going to unpack exactly what this index is, how it works, and, who's actually pulling the strings. Right off the bat, we're looking at the official NSE indexogram for the Nifty Next 50, drawn from data as of June 30, 2026. Our goal today is to look past all that dense financial jargon and just use this raw data to figure out exactly what makes this specific collection of companies tick.
Here's our roadmap for today. First, we'll meet the Nifty Next 50. Number 2, we'll cover the rules of the game. Third, we'll look inside the portfolio. And fourth, we'll wrap up with governance and usage. Okay, let's dive into this. Section 1, Meet the Nifty Next 50, the waiting room.
To truly understand this index, we actually just need to do a little bit of very simple but totally crucial math. So imagine the Nifty 100 index, right? That's the top 100 companies in the market based on full market capitalization. Now, take that elite group and just subtract the Nifty 50, the top 50 absolute biggest giants. So who are you left with? Well, the remainder is the Nifty Next 50. It's literally companies ranked 51 through 100. These are massive, highly successful blue-chip organizations that are quite literally next in line to enter the top 50. It's that straightforward.
So how is this value actually calculated? Well, the index uses what's called the free float market capitalization method. Now, free float simply means we're only counting the shares that are readily available for trading by the public. So we completely exclude locked-in shares held by promoters or the government. The level of the index reflects the total free float value of all 50 stocks relative to a specific base value. And historically speaking, this index has a base date going way back to November 4th, 1996, and it started with a base value of exactly 1,000. That gives us a fantastic historical anchor to see just how much these rising stars have grown over the decades. Moving right along to Section 2, Rules of the Game, focusing on eligibility and rebalancing. Now, getting into this waiting room isn't random. Inclusion is strictly based on a company's standing within that larger Nifty 100 universe. It's a completely automated, rule-based process, representing those 50 non-Nifty 50 constituents. But they have some really smart built-in risk levers. For instance, stocks that aren't available in the futures and options, or F&O segment, well, they face some pretty strict weight caps. And to ensure the index always accurately reflects the current market reality, the whole thing is rebalanced semi-annually. So it's a very dynamic, living portfolio. So the crucial point here is how they handle these hard limits on quarterly rebalance dates. The cumulative weight of those non-F&O stocks is capped at 10% total, and individually, they're capped at just 4.5%. This is a huge deal because it ensures the index remains highly liquid and doesn't become overly dependent on stocks that might be, a bit harder to trade rapidly. It's really just a brilliantly simple mathematical safeguard for managing both liquidity and risk. And of course, transparency is absolutely everything in index management. Let's chronologically walk through how that semi-annual rebalancing actually happens in practice. Step 1, the methodology collects average data for the 6 months ending on a specific cutoff date. So they aren't just looking at a single day's snapshot, they're looking at sustained performance. Step 2, before any changes are made, a full 4 weeks prior notice is given to the market. So absolutely no sudden surprises. And finally, step 3, the semi-annual rebalancing is fully implemented. This super transparent process basically guarantees that investors know exactly what's happening and exactly why. All right. Section 3, Inside the Portfolio, looking at the sectors and the heavyweights. Let's see where the capital is actually flowing here. Financial services takes a massive 21.11% share, followed really closely by capital goods, driving 17.73% of the index weight, and power coming in at 10.48%. This data tells such a powerful story about the underlying engines of the broader economy. I mean, these aren't just abstract numbers, right? These are the massive banks, the infrastructure builders, and the energy providers that are scaling up rapidly. Now, the rest of the portfolio relies heavily on the everyday consumer. We've got fast-moving consumer goods and automobiles at over 8% each, all the way down to oil, gas, and healthcare at around 6.5%. This spread captures a truly holistic cross-section of corporate growth. We're basically looking at mobility, energy, and medicine all driving forward together in this waiting room. Now, what's really interesting about this data is the actual distribution. Adani Power sits at the absolute top, but it holds only 3.80% of the total weight. Tata Motors is at 3.61%, Divi's Laboratories at 3.42%, and Hindustan Aeronautics at 3.40%. You see what's happening? Even the absolute heaviest hitters max out well under 4%. Compared to some top-heavy indices out there where maybe one or two companies dictate like 10 or 15% of the whole movement, the Nifty Next 50 is remarkably distributed. Your risk is spread out beautifully across all 50 companies.
Finally, Section 4, Governance and Usage. Who pulls the strings?
So why does this specific data matter so much to the broader financial industry? Well, it's because it's actively utilized as a core foundation. The Nifty Next 50 is heavily used for benchmarking fund portfolios. Basically, it's the measuring stick mutual fund managers use to see if they're actually doing a good job. Beyond that, it serves as the direct blueprint for launching index funds, creating those highly popular ETFs, and structuring all sorts of bespoke financial products. Literally, billions of dollars rely entirely on the integrity of this data.
Which naturally leads us to a very important question. With all this capital at stake, who actually controls and manages this index day to day? Like, who makes absolutely sure the math is right, the rebalancing is fair, and the methodology is strictly followed? Well, it relies on a highly robust three-tier governance structure. It's definitely not just one person sitting in a room somewhere. Tier 1 is the board of directors of NSE Indices Limited, and they provide that crucial top-level oversight. Tier 2 brings in outside expertise with the Index Advisory Committee for Equity. And then Tier 3 is the Index Maintenance Subcommittee, and they're the ones who handle the rigorous day-to-day operational integrity. This multi-layered, highly professional team ensures that the index adheres strictly to its stated methodology, which completely removes personal bias from the equation. And that brings us to the end of our dive into the data. I want to leave you with this thought. Today's Nifty Next 50 constituents could very well be tomorrow's Nifty 50 giants. The market is incredibly dynamic, it's constantly shifting, and this index is basically the ultimate tracker of that upward mobility. The data shows us exactly who is sitting right there in the waiting room. So the only question left is, are you watching the rising stars? Thank you so much for joining me today and learning alongside me in this explainer. Until next time, stay curious and keep focused.